Markets showed solid gains in 2025, weathering tariffs, foreign conflicts, Fed uncertainty, and the fear and greed driving the artificial intelligence trade. How will these trends and others drive investor returns in 2026? Joining me now is Vaneck CEO Jan Vaneck. Jan, lots of talk about an AI bubble, of course. You've got circular financing. You've got nearly .com level valuations. You've got debt from companies that used to have, massive free cash flow. And I'll be honest, I'm worried about the froth. You told me you are sleeping like a baby. Why so calm?
Well, you have to ask yourself, when 10 stocks are 40% of the entire market cap, am I in a bubble? So it's a very reasonable question, of course. But I mean, when you look at what's happening to the technology, the demand for tokens went up 39 times over the last 12 months.
Now, can you explain what token means?
It's basically a measure, the technology measure of kind of, I'll call it searches, because it's sort of a word plus some tech. So you've got an explosion in the underlying demand, and OpenAI alone has 800 to 900 monthly active users. So this is a phenomenon. It's not some made up like teeny little bubble. And the way I see it's being integrated into my daily work is phenomenal. So, and then when you look at like daily commercial life, somewhere between 2 and 20% of website traffic is now coming from the AI prompts. And then of that, OpenAI is getting 90% of that traffic.
Wow.
So that's why they are this sort of Mag 8 company. And so they deserve to be focused on. Now, to your point, the financing around OpenAI is a little bit iffy. They're doing an equity round now. But I sort of said before, right, that the AI bubble has been popped already. If you look at some of the compute platforms like a CoreWeave or whatever, they're down 50 to 35%. Bitcoin miners have been killed in the last 6 weeks. So I think, and they were pivoting to AI. So I think we've had a nice cleaning out of the market, all ready to party in January.
All right, supporting your point is NVIDIA, which is sort of the other, right, big AI stock along with OpenAI, or it's not a stock yet, but it will be, and we all look forward to that day. You have been bullish on semiconductors, especially NVIDIA, and recently you've shown that NVIDIA is actually not that expensive.
Yeah, I mean, when it got to 50 times sales in the summer of last year, we were like, okay, let's take a break. But now, NVIDIA is sort of almost at market cap valuations on a forward basis. It's about 20 times, which is sort of, it's bounced around there in the last 5 years. So, I mean, I don't pick one particular stock, but I think that's a very, very healthy market right there, where the fundamentals, the tech fundamentals, justify the market caps, and you have a leading company with a great competitive moat at reasonable valuations.
And most of us own NVIDIA, whether we do it directly or not. So, that is reassuring. Total other end of the risk spectrum. You have been bullish on gold for a while, pounding the table on it when it was super cheap. You are still bullish. Why? That almost seems like an odd barbell.
Yeah, I think many years of a gold bull market, I think. So first of all, yes, we have the sort of Fed loosening. So that is a backdrop. But as you know, we at Vaneck definitely think you have to look at the world economy. And the dollar is really now being replaced by gold. If you look at foreign central bank reserves, gold's value is passing that of U.S. Treasuries. And so, I mean, that's really like the China, like I say, China, India, they don't want to be dollar-centric. And they're going to be the world's top two of the top 4 consumer economies in the world. So very much think that gold is being replaced. And I thought, okay, it went way up technically speaking. I thought maybe it corrects down to 3,500. It didn't even come close. Like, it didn't even come close to a 20% correction in price. So I think there's just a lot of support globally for this asset, and it's a second currency.
Okay, digital gold, crypto. You've been a bull. You're not right now on Bitcoin. You think it might have farther to fall. Why that? Why is that?
So there are a couple different factors into Bitcoin. There's global money liquidity, then there's liquidity within crypto, and then the third factor is like, it is a technology. What is happening at the network level? Is there demand for the network? And one of the important ingredients for running the network is Bitcoin mining. And everyone knows every 4 years, the amount of Bitcoin you get for running that network goes down by half. Every 4 years, it's gone down, the price of Bitcoin in this 4-year cycle has gone down about 65%, and that's next year, 2026. So I'm a little bit, let's not be a hero here, believe in the long-term adoption of the asset, but investors have to know about that cycle. There's a lot of reasons why it might or might not hold, but I think investors have been selling recently to position themselves ahead of that, what's going to be, I think, a choppier period for Bitcoin.
Yeah, if you believe in the 4-year cycle, you're not going to wait till year 4. You're going to sell ahead of it, and that may be what's happening right now.
I think so.
Okay, real quick, your favorite country in the world other than the U.S. for investing?
Well, you know, 10 years, you want to own some Indian equities.
Okay.
It's going to be the 4th largest consumer market in the world. It's going to match Europe and keep doing. They had a bad year, so it's a good time to enter.
All righty. Jan Vaneck, thank you so much. We'll talk to you in 2026 and see if this comes true.
All right.